India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning, getting into the week, the thick of things. Yesterday was disappointing. It was because finally we ended down after many attempts and many recoveries, but many sell-offs as well. Extremely volatile session. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi guys,
morning.
Good morning. In Mumbai, we've gotten used to either the rain or the haze in the city. But the last 24 hours have been slightly clear. We've got clear skies, clear sunshine. And I think the bulls will hope for some clarity now on the street and the direction ahead as well. Let's see if they get there or not.
Well, we'll be hoping for some kind of earnings surprises. That hope continues. And we have the big listing today. So let's see whether or not, after all the debate, whether or not it can surprise on the upside. We'll wait by for that.
in the Gen Z lingo, some K-pop today.
Wow, okay. You're really with it, Prashant. I need to catch up.
Anyway, we got, not Gen Z, what is it? Gen, whatever, after Z, right?
Z, whatever. I thought that was the last one, millennials and Gen Z. Never mind. We'll do our homework and come back on this one.
US markets have taken a bit of a breather. So let's just sort of tell you what you need to know as we begin the session. And we start with the handover from Wall Street, right? Because yesterday, of course, I mean, we tracked where we left off. But then after we closed and US traded, a bit of a breather. S&P, the Dow, the Russell 2000, Nasdaq was still higher, largely led by AI, semiconductor stocks, etc. Nvidia, for example, was up 4%. That's a change on the indices. S&P down, Russell down, Nasdaq up a little bit in terms of trade. Now, Nvidia was up 4%. There are big earnings from companies like Tesla, Amazon. Expectation is that they're going to be strong. In any case, I mean, TSMC, Taiwan Semiconductor, reported blockbuster numbers. And they are, of course, the largest semiconductor company. Nvidia, of course, feeds off that as well. So largely, it was a big tech semi kind of a play last night. Now, you got a big jump in yields as well. And I was saying this yesterday morning that when we came into the yesterday, we had the situation where yields were down, dollar was down. But, if you are looking at a Trump presidency and betting polls, etc., are putting him ahead, I mean, it is bad for the bond market. It's good for equity markets. Yields went up 11 basis points. We're at about 4.2%. Essentially, it's inflationary. Dollar index went up about 0.5%. Just under 104 odd levels is where we finally left off at. I think on the dollar this morning, there's a bit more downtick. So we'll see. We'll have to track it. But these are very large moves. The yield, by the way, on the 10-year is the highest we've seen since late July. So just to give you some context. Oil prices also moved up about 1.33%. We're back above 74 on Brent oil prices. Just to circle back the levels here, for the Nifty, the fact that we've had a negative close, I mean, I don't think there is a big correction, big crash or something that's coming. I mean, I don't think we are going to see, at least in the Nifty, a very fast-paced down move. But, you got to defend some of these levels, which is 24,567. This is an important level on the downside. If we are able to defend it, I mean, it kind of keeps hopes alive. And of course, once you start to pull back, we'll have to assess on a day-to-day basis whether the pullback is a real turnaround. But first, we need to get a positive daily close after these kind of phases. So on the way up, I mean, the closest is the 40-day exponential moving average, which is 25,092. Now, that is about 200 points away from where we left off yesterday, but that is a little more actually. So that's the first level which the market needs to get its head above. Now, for the Nifty Bank, it found resistance exactly at two numbers, 50% retracement of this entire fall. I mean, on the way up, on the pullback, the 50% retracement and the 20-day moving average are almost exactly coinciding. The Bank Nifty almost exactly there, went there and then turned down around. Here, on the low of 51,000 needs to be defended. We left off at about 51,960 yesterday. And on the way up, resistances are 52,577. And then you got the 61.8% retracement, which is 52,835. Yesterday's high is 52,577. So that's the first level. The Bank Nifty went there and then pulled back a little bit. So let's see. For the broader market as well, I mean, I think it's looking a little painful now, and portfolios are hurting because mid caps, small caps, I mean, it was a bit of a crunching fall that we had, and it's not as if at the margin earnings are showing any, but they were not expected to be good, but they're, I think, a little more subpar as compared to even expectations. Gift Nifty will come up on your screen, giving you an indication. It's a flat kind of a start, 20-odd point higher start. Surabhi.
Oh, absolutely, Prashant. I was also looking at the surge in yields, right? Because it's rather uncanny. The equity market hasn't fallen that much, but the bond market seems to be sensing something. And it took me back to the comment that Adani made on this very show yesterday. And I think that's a question that markets are beginning to ask and price in, whether the 50 basis points was, too aggressive too early, whether that was a quote-unquote mistake. If you look at the probability and the odds right now of the November meeting, then earlier there was absolutely, no one expecting a pause. Everybody was in the camp of at least 25 basis points, if not 50 basis points. But now there's a 13% probability, if you go by the FedWatch tool, of a hold in November itself. So I think this new reality with the strong data is what the bond market in the US is pricing in, along with all the commentary that we're getting in from the Fed officials. Nvidia is making all the headlines. Now it's $3.5 trillion in market cap. And earnings is a very fast-moving train in the US. There's lots of interesting names coming up today. There's GM, there's IBM, Verizon, Tesla, Boeing. So I think big tech and large corporate American earnings report card will continue to drive the global headlines. Let's come back closer home in our neighborhood, Asia, this morning, just to get the hot boards up. Yeah, I'll come to the FII numbers in just a second, but if you look at the Asian picture, it's very mixed today. There's buying in mainland China and Hong Kong. There's a lot of selling in other regional markets like the Nikkei, like even Australia for that matter. So Asia is not, following that one consistent beat. Let's see which way we go. The Gift Nifty obviously is talking about a green start right now. Now let's come to the flows, and good news and some cheer here. We cheer every time that selling figure is not as high as 5,000 odd crores from the FPIs. Yesterday it was a far more modest 2,200 odd crores, and domestic institutions offset it very nicely with a nice buy number of about 3,000 crores. Earnings. That's what it's all about. Just talking about the highlights of the post-market action yesterday. And I've just picked up one or two stocks of sectors which are in focus or trends that are in focus. So Bajaj Housing Finance, obviously no issues over here on asset quality whatsoever. It is a housing finance lender, and the AUM growth was 26%. But if you start looking at, the asset quality issues, if you remember RBL Bank from yesterday, today I'm going to watch out for Union Bank of India in a lot of detail, because at a granular level, that asset quality is flashing red all over the place. Provisions are higher, slippages are up 120%. Let's see how the market reacts to this one. And also another high-profile sector, the capital market segment, 361 declared numbers, and they've missed the mark, at least on a quarter-on-quarter basis. So let's see. Yesterday, remember, a lot of the stockbroking stocks had a lot of selling on them. Let's see what happens today as well. Today's results tally, it's a long one. Hold your breath. Bajaj Finance, ICICI Prudential Life, Aditya Birla Real Estate, the erstwhile Century Textile that's been launching so many projects around us here in Mumbai, Canfin Homes, M&M Financial, IIFL Securities, long list, Varun Beverages, Persistent Systems, and Zomato. On Zomato, beyond earnings, today is that board meeting when they'll discuss the QIP. So let's see what details come out and why they're looking to raise close to $1 billion in terms of equity capital. So that stock is in focus. And then, of course, the big headline at 10 o'clock is going to be Hyundai making its India-listed market debut. Now, you already know this by now, that the expectation is that it's going to be a muted start because of various factors, because it was an OFS. It's only the promoter selling about 17% stake. If you go by the so-called grey market premium, it's not been too much. The issue price was about 1960. People are talking about maybe a 60 to 70% pop. So, give and take around the 2000 mark, 2020 thereabouts. Let's see how it goes. But a lot of the long-term watchers say that this is not a listing pop story. It's more of a long-term play. The retail portion was not fully subscribed, but of course the issue went through thanks to institutional buying. So it's a big moment, at least, for the auto sector with this mega listing today. So definitely all eyes on Hyundai.
Well, that's right. I think if you're talking about the grey market premium, Surabhi, which is now in a premium, last week briefly it went into the red. So at least, that's it's expected to be a flattish to maybe a mildly positive start. But, you have the troika today that's actually against us, because crude oil prices popped up a little bit, went closer to around $75 per barrel mark. You had the dollar index that's moved to about that 104 odd mark, and the US yields as well did see a pop of close to around 12 basis points odd. So the troika, so to call it, well, that's against us today. The bulls, though, they are hoping to defend the lower end of the range, both on the Nifty as well as the Nifty Bank. Until now, they've got lucky. at around the 24,500, 24,600 mark. Risk reward actually has favored the bulls, so they'll be hoping to defend at least the lower end of the range. We'll have the Nifty Financial Services Index that plays out its weekly expiry as well, so that'll be another monitorable that we'll be looking at. How are the FIs and clients positioned? Well, the clients, they continue to build on the long positions. And in the last 1 week, well, they've added close to around 40,000 contracts. So close to around a 20% increase in the total long positioning that they had. While the FIs, well, they were short. They were at around 1.5 lakh contracts on the short side. In the past week or so, they've added close to around 10% to those short positions as well. So both of them at the opposite ends of the spectrum. The clients have been going on adding their long positioning. So that is heartening to see. The levels to track now. You know, the Nifty crucial support comes in at around that 100 DMA, which coincides with the recent lows that you're seeing, 24,500, 24,600. Important mark. Even if you're looking at the options data, well, that will tell you resistance comes in at around this 25,000 mark, 25,100 mark. So a couple of data points out there. The PCR has come down to around 0.8, 0.81. And we have seen call writing that's come back into play. And because of that, the bears, they are getting very confident that this range is going to be defended. So you'll get confident only once from a bullish perspective, once we get past this 25,100 odd mark. The Nifty Bank, yesterday it showed signs that it wants to run away. It briefly went above the 20 DMA, but unfortunately, it couldn't conquer that on a closing basis. So the 20 DMA becomes a bit of a resistance, while the 50 DMA, which is a couple of 100 points away from current levels, that, in fact, is an important support for the Nifty Bank. So we'll have to keep an eye out on the 50 DMA, and hopefully it doesn't get breached. Well, moving to HDFC Bank, that's the big constituent, right, of the Nifty, and that yesterday performed. It was up 2.5%, but the ADR was up close to around 4.3% out. So let's see whether or not HDFC Bank, after underperforming for the last 18 to 24 months, does it want to take on the mantle and now support the Nifty? That's going to be an important monitorable as well. Besides HDFC Bank, the other two stocks that I'm looking at is Nalco, both as well as Tata Chemicals. Both of them have come out of the F&O ban. Nalco yesterday was outperforming even in a weak market in comparison to its metal peers. That's because of those alumina prices which have scaled up. So keep an eye out on both these two names.
Okay, all right, Nigel, thank you very much for that. So keep an eye out on some of these names. Robert Sockin is with us, global economist at Citi. Robert, good morning. Good to have you with us here. Thank you very much for your time. I think we're 2 weeks away from US elections, and I don't know what how Citi and the team at Citi sort of viewing it. Is the market pricing in a Trump presidency, or do you think it's still too close to call? What's the sense?
Hello, and thank you, as always, for having me. It's really nice to be here. I think the last point you made is exactly the right one. It's still really close to call. You know, we don't have a house view within economics. We're tracking the polls as closely as everyone else, and it still seems to be a very close race. It does seem in some types of polling that Trump maybe have made up some ground over the last several weeks. But if you look at the key swing states, all of those swing states look to be within the margin of error. And so it could be the case that either of them end up winning, because those swing states are the most important to watch. So, you know, the market sentiment, people, when you speak to them in the market, they seem to be feeling more of a Trump victory. But when you look at the polls, it's still an extremely close race.
Oh, yeah, absolutely. And yesterday, Robert, morning, our time morning, I guess it's evening for you. And yesterday it was all about McDonald's, right? I couldn't stop watching those reels on repeat with Mr. Trump there dishing out French fries. So, yeah, it's really happening yeah, as far as the election goes. But from a market perspective, while obviously we're tracking rates and what the Fed is going to do and the economy, but once the results are out, is it going to matter in a material way at all? I mean, it's volatility from here till the result announcement date. What after that?
Yeah, and this is a really key question. And I would make 2 points. One, in terms of the outlook for Federal Reserve policy, the Fed is not going to make assumptions about who is going to win the election. And whenever somebody wins the election, they're not going to make assumptions about certain policies that are going to be passed. Because, you know, candidates can say a lot of things on the campaign trail. It doesn't mean they'll translate into actual policy. So really, the kind of rules of central banking are you take the lay of the land is given once those policies are set and passed, and then you incorporate them into the outlook. So I think that's very important. The second factor is we don't know the exact makeup of policy after that's going to happen after the election under either candidate. It's going to depend A, on the makeup of Congress, and then B, as mentioned, how what they've said on the campaign trail and in the past translates into policy. So, for example, people are talking about with Trump that certain policies may end up being inflationary, such as he may put on a lot of tariffs, maybe across the board tariffs. This is something we have to monitor closely, but we don't know the extent to which these policies will be implemented, and if they are, when they will ultimately be implemented. So I think there's still a lot of uncertainty about who's going to win and then what that's going to mean on the other end. And we have to see, once somebody wins, what the actual policies they try and put through end up being.
All right. Hi, Robert. Always good to see you, Wayne. Robert, what are you factoring in, though? I think earlier when we chatted, you were factoring in 2 more cuts for the remainder of this year. Do you stick to that? And also, what about the Indian markets? We have been thumping the table that, India's giving a good amount of policy outlook. We're giving a good amount of growth as we move to around the $10 trillion mark. But the FI selling continues. And now I think the holding would have come down to around 15 to 16%, which is a multi-year low. How are they positioned with regard to Indian markets? This needs to stop at some point of time. So policy and FI positioning in India. Please go ahead.
Yeah, great set of questions. And first on the Fed, I think the bar for the Fed to do nothing in November is very high. You are seeing some of that percolating around markets where some people are thinking the Fed could pause soon given the strong string of data that we've seen. I think given that they started with a 50 basis point cut and that policy rates are still far above neutral, it would be very hard to move from that positioning to a type of a pause in November. So I think they're going to cut 25 basis points in November. Again, the bar to do nothing is very high. And then after that, it's going to depend on how the economy evolves. If the economy continues to look as it has over the last month, which is really feeling a lot like a soft landing with a strong consumer, a stabilizing labor market, then the Fed is going to move at a more gradual pace. My base case would be they would still cut 25 basis points in December, even with that type of outlook, because they're still far above neutral. But then after that, it's going to depend a lot more on how the data evolve, and maybe they move to a much slower pace in 2025 if the data continue to hold up very well. Now, of course, for the Indian markets, we've talked a lot about on the show. India has been one of the best performers in our forecast. We've seen global resilience around the world. I think India is very well positioned to be a strong performer in the global economy. And I do think as global interest rates are going to continue to fall, you're going to see a pickup in global manufacturing activity, something that we really have not seen fully get started in this cycle. You've had some fits and starts, but the manufacturing sector globally has been relatively soft. And as that manufacturing sector picks up globally and global trade picks up, that's going to be another tailwind for India. So I do think long-term, India has a lot of positive forces working in its favor. And I do think as interest rates come down and global trade and global manufacturing improves, that's going to be another important tailwind for the India economy.
Surabhi, on the point about U.S. interest rates, right?
Mm-hmm.
There was the Stanley Druckenmiller interview in which he quoted Jim Grant, who writes the famous rates daily. He said the Fed is actually the forward guidance. Mm-hmm. He said the bar for the Fed to do nothing in November is going to be very high. He says actually the Fed is not looking at inflation. They're actually working on the basis of their own forward guidance. They're kind of trapped by the forward guidance
because they've
told the
declared
market
100 basis points by the end of the year.
We're going to do it. Now they're trapped. Now they, so
eat your words, so to speak. But Robert, thank you very much for putting it out there. And these are interesting times. Let's see if indeed they deliver that 25 basis points, even though the data may not be pressing them enough to do it. Thank you for joining in today. Well, Robert was quite optimistic on the Indian economy. Right now, here's a slightly more cautious call coming in on the immediate term earnings. And this is our equity call of the morning. Sanjeev Prasad of Kotak Institutional Equities says, second quarter FY25 earnings season offers little to cheer so far, with fairly muted underlying trends across sectors. He says, more pertinently, the results highlight our long-standing concerns about risks to both profitability and volume in several sectors, from disruption and companies' profitability-centric strategy. He says the market has either ignored or cheered these issues. He makes a few changes to the recommended large-cap model portfolio by including HDFC Life and increasing the weight on Apollo Hospitals. and TCS, and also removes delivery and reduces weight on HCL Tech and SBI Life.
Okay, all right. We'll take a quick commercial break here, but let's quickly tell you what the corporate interactions which are lined up here in the program over the next 2 hours or so. We have the management of Cyient DLM joining us to talk about their second quarter earnings. That's at 8:30, 9:05. We'll have Ajay Singhani of EPAC Durables, and this is on the back of a tie-up that they've done. Our market master is Anand Shah of ICICI Prudential AMC. 9:30, we'll have the management of CG Power. The stock sold off 6% yesterday. Amit Dikshit of ICICI Securities will be speaking with us at 9:40. Expectation of the steel sector. 9:50, Yogesh Malhotra of Gravita India on the back of their second quarter earnings. 9:55. And of course, we'll have the big listing, Hyundai. And we'll have, Prakash Diwan joining us. And we'll also have Ashwin Patil of LKP Securities joining us to talk about that. And of course, 10:15, it's the economy with Lata. She'll have Suresh Ganpati of Macquarie and Harsh Vardhan of Bain & Company to talk about, the consumer and are we in a bit of a funk in terms of a slowdown. So that's the lineup here coming up.
Well, time for a quick break, but we have a lot of stocks that we're going to be tracking for you. We get to that in just a bit on the other side of the short break, but let's run you through the list. We're looking at Bajaj Housing Finance, Ultratech Cement, City Union Bank, Route Mobile, Cyient DLM, EPAC Durable, Ola, you have Epigrel. All of them will be reacting to positive news flow, while Union Bank and 361 WAM will be reacting to negative news flow. We get into detail on the other side. You don't go anywhere.
Welcome back. You're with us on Bazaar Morning Call. And as far as the implied open is concerned, it seems that we could start with at least some green on the screen. Let's see if that remains intact, because like I said, cues across Asia are very mixed. You have the Chinese markets moving higher. A couple of the other big ones like the Japanese markets and Australia, they're all lower. But what about individual stocks? It's earnings season and our team is standing by with the CNBC-TV18 list of stocks to watch for the day. Guys, good morning to all of you. Let's start off with, once again, the BFSI space. Abhishek, how did Bajaj Housing Finance fare?
Well, the disbursements were weak over there, but AUM growth is pretty strong, which helped the PNL as well. So the disbursements were down 1.15% on a YY basis and almost flat on a sequential basis. However, the AUM growth was at 26.3% YY and about 5.7% quarter on quarter. This drove the PNL. So the NII growth was 7.3% quarter on quarter. The other income growth was robust at more than 26% quarter on quarter. The PAT grew by 21% YY, but 13% quarter on quarter, which is pretty strong. The net interest margin expanded on a sequential basis to 4.1%, which compares to 3.9% in the previous quarter and about 4.4% in the same quarter last year. And asset quality has remained stable. Gross NPA ratio is at 0.29% versus 0.28% in the previous quarter. Back to you.
Right, thanks a lot for that, Abhishek. Well, I'm looking at Ultratech Cement, and yesterday the numbers were disappointing. The stock ended with a cut of around 2%. Now, the con call was post-market hours, and the management sounded quite confident. I'm looking at a lot of brokerage notes. Mostly what they indicate is two factors. One is that it's the pick of the pack. If you have to play cement, you have to play the big boy. And the other one is that profitability is likely to have bottomed out. Let's run you through the key highlights of that con call. On the cost side, they've been saying that in the next few years, they're going to save 300 rupees per ton, increased renewable energy, increased usage of waste heat recovery system, and operating leverage will play out as well. On the pricing trends, prices currently are 2% higher than what it was on an average for the past quarter, so that's good news. And the industry dynamics, they're expecting a bounce back in the second half of the year. So they are targeting double-digit growth for FY25, while the industry should grow by around 7 to around 8%, so they'll keep their market share because they'll be growing faster than the industry. They've also said they've already commissioned 10 million tons. They'll commission another 6.5 million tons. And on the inorganic side, on India Cements, they are awaiting CCI nod out there. Kesoram, they said the NCLT hearing is scheduled for the next month. So in all probability, this transaction will close out in the fourth quarter of the year. And on JP, they say that that asset remains under arbitration. Just a broad read-through that you got from those numbers is that it's more positive than negative, and the stock has corrected close to 10% in the last 1 month. So expecting a tinge of green on that one.
Okay, so Ultratech is going to be on our radar as well. But for now, back to Abhishek. Quite a few lenders have started flashing red on asset quality, slippages rising, provisions rising. Abhishek, tell us about City Union Bank as well as Union Bank of India.
Well, to begin with City Union Bank, their business momentum was pretty healthy with respect to deposit growth. It was at 4.5% sequentially. The loan growth was about 2.5% sequentially. The net interest margin has expanded, and that is surprising factor. A 13 basis point expansion in net interest margin is unheard in the banking sector in this quarter, especially when cost of fund is rising. So the net interest income growth is about 6.8% quarter on quarter. PAT growth is about 7.8% sequentially. The slippages remain stable over their annualized slippage ratio coming down to 1.47% versus 1.53% in the previous quarter. Their asset quality also saw an improvement. Gross NPA ratio down to 3.54% versus 3.88% in the previous quarter. Now, Union Bank of India, the business momentum remained weak over there. Deposit growth of just 1.5% quarter on quarter. Loan growth actually declined on a sequential basis by about 1.7%. Slippages were about 5,219 crores and the write-off was about 4,160 crores. So it looks like one corporate account might have slipped into this account, this quarter. So that which was written off as well. So it looks like MTNL might be the account that might have slipped in this quarter. The exposure over there of Union Bank of India was about 2,500 crores. Asset quality remains stable. Gross NPA ratio at 4.36% versus 4.54% in the previous quarter. The net interest margin has come under pressure. It's declined to 2.9% versus 3.2% in the same quarter last year and about 3.05% in the previous quarter. Back to you.
All right. Abhishek, thank you very much for that. So lots of banks and financials. 361, the wealth manager also reported numbers. So let's go across to Vamakshi for details. Vamakshi, morning.
Well, good morning, Prashant. Not a great set coming in from 361 WAM. Total revenue saw a dip of almost 2% sequentially. It came in much lower than what the street was expecting as well. Largely, the dip sequentially is being led by the transaction and brokerage income, which saw a dip of almost 15%. But on the other hand, the annual recurring revenue saw an uptick of almost 6% sequentially. However, the yield on this revenue saw a bit of moderation to 68 basis points. Operating expenses, on the other hand, surged by almost 13% sequentially. This is much higher than what the street was expecting. Resultantly, the cost to income ratio too surged to almost 50.8%, again higher than what the street was expecting, and the operating profit as a result dipped by almost 13%. The average ARR AUM saw an uptick of 12%. We're seeing healthy inflows in the ARR, which is up nearly 81% sequentially, but the AIF portfolio, which is a part of the AMC business, saw an outflow, and this is a bit of negative. That is because this is a higher yielding book. We have a brokerage note coming in from Investec as well. They've got a whole rating with a target price of 1,050. They say that 361 has been delivering strong PAT growth on the back of strong transactional income, but the sustainability of this transactional income still remains a question. So overall, not a great set for this company.
Okay, all right. Got it, Vamakshi. Thanks very much. We'll keep that stock on the radar. Let's head across to Upasna now. She's looking at earnings from Cyient DLM. And of course, the combined project that EPAC is now launching, getting into a lot of the consumer electronics in a big way. Upasna, tell us more.
Good morning. First up, let me start with Cyient DLM. Companies reported in-line set of numbers. Revenue stood at 389 crore with an uptick of 33% on a YoY basis. And this revenue growth was mainly driven by companies' key segments, that is defense and aerospace. EBITDA margin stood at 8.12% with an uptick of 7 basis points on a YoY basis, and company's PAT stood at 15.4 crore with an uptick of 5% on a YoY basis. Now coming to company's order book, it stands at 1,979 crore, which was down about 13% on a YoY basis and 7% sequentially. Next up is EPAC Durable. Hisense India partners with EPAC Durable to manufacture air conditioner and home appliances in India. EPAC Durable will immediately invest firstly in a new manufacturing facility in Sri City, that is in Andhra Pradesh, and the projected production capacity is 1 million RACs by FY28, and production will soon start by June 2025 is what the company has indicated. Hence, both these stocks remain in focus today, and I expect both of them to open in green.
All right, Upasna, thank you very much for that. Route Mobile is the next one that we want to focus on. Reema is here with details. Reema, morning.
Hi, good morning. So things are still slow for Route Mobile. This is a CPaaS company. It helps enterprises connect with the bank, the enterprise connect with a consumer. Every time you make an order, you get that SMS saying your order has been delivered, you've made a payment. So all that messaging which happens either on SMS, that's the traditional route, or even on your OTT platforms, for instance, WhatsApp, is done by a company like Route Mobile. But things have slowed down for the company for the last 4 quarters. Even this quarter, you've seen a flat revenue growth, and on a year-on-year basis, it's only up close to about 10-odd%. But I'm going to go with green for Route Mobile because compared to the prior quarters, there is a little bit of a quarter-on-quarter pickup in revenues. That's point number 1. 2, the stock has been flat for the last 1 year owing to demand coming under pressure. The company in the press release says they're optimistic about Q3 given the festive season. Margins have expanded on a sequential basis, aided by a little bit of an exceptional item. The profit has also seen a jump. But for more details on the environment, there is a conference call at 4 p.m. which will be important. Back to you.
Got it. Thanks a lot for that, Reema. Well, let's wind this down with Sudarshan on Ola and Epigraph. Morning, Sudarshan.
Morning, Nigel. So we'll start with Ola. It has updated exchanges regarding the complaints was received for its vehicles. It says it had received 10,644 complaints from Consumer Protection Authority, of which 99% of those complaints are resolved. And apart from this, there is another positive news. I was checking the Vahan data, and in the month of October, market share currently stands at 36%, which is highest in last many months. Second stock is Epigraph. It has announced its opening of QIP issue. Sources say company is looking to raise up to rupees 400 crore and base size is of rupees 250 crore and green shoe option is 150 crore and indicative price is rupees 2,093 per share, which is a discount of just 1% to its CMP. And regarding QIP proceeds, this company is looking to use the money that they are going to raise. First, repayment and prepayment of certain outstanding borrowings. Second, to purchase fixed assets. And third is general corporate purposes. So that's the reason I'm going with green for both these stocks.
Okay, all right, Sudarshan, thanks very much for that. Yeah, Ola is interesting. Now they're claiming they've resolved over 99% of the complaints. Let's see if it has any positive rub-off impact on the stock at all. Quickly recapping our list of stocks to watch then. The ones that have positive news flow around them are Bajaj Housing Finance, Ultratech Cement, City Union Bank, Route Mobile, Cyient, DLM, EPAC Durables, Ola Electric and Epigraph. The ones that have negative news flow around them are Union Bank and 361 Wealth Management. All right, that's our stock list. So expecting more green than red, at least on some of those newsmakers. Let's now figure out what's the latest in the world of commodities. Manisha is joining in with a roundup of all the action. Manisha, hi, morning.
Morning, and thank you for that, Surbi. Well, it's an all-time high continuing for the gold prices today as well. The U.S. election jitters and Israel retaliation against Iran are a couple of factors which keep supporting the prices here. There also have been a couple of reports overnight, one from Citi, another from Bank of America, both suggesting that $3,000 an ounce in the next 6 to 12 months is a possibility. Of course, there could be some near-term correction by the year end. That is when a lot of people start closing their books, but a longer-term view is still on the higher side. Silver as well is trading at around 12-year highs. Most of the metal prices seem to be doing well also because of the strong China economic data, the LPR cut. That has led to zinc prices trading at a 2-week highs. Aluminum right now is trading at a 4-month highs. The Chinese buying has been on the stronger side as well. So that really seems to be supportive. And even as the crude oil prices gained up by 2% overnight, in the Asian markets, it's 0.5% down right now. So the volatility continues and it continues to trade within a range.
All right, Manisha, thank you very much for that. So that's commodities and metals in focus. We'll take a quick commercial break here. We're going to come back, connect with Amnish Agarwal of Prabhudas Lilladher for some fundamental stock talk that's coming up in just a bit.
Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good morning. Well, let's have Amnish Agarwal, the head of research at Prabhudas Lilladher, who joins us. Hi, Amnish. Thanks a lot for joining in. Well, let's talk about Bajaj Housing. What do you make of the numbers? The stock listed, it went closer around the 200 rupee mark, then it corrected to around the 135 odd mark. The numbers are pretty okay, though. Your view on the stock at current valuations?
Morning, Nigel. You see, Bajaj Housing Finance, it listed at a significant premium, and after that, I think stock has cooled down a little bit. But if you look at, say, purely the numbers and the valuations it is trading at, the stock would still be something like, I think, at least 6.5 times approximately on the price to book on FY 26-27. So even now, I don't think the stock is cheap. And over a period of time, I don't rule out stock settling to levels which are lower than the current ones.
Oh, okay. Amnish, hi, morning. Staying with financials, this is turning out to be a very interesting season for a lot of banks, right? So I think City Union Bank today stands out because it's the one that's not showing any shockers on asset quality. On the other hand, there's Union Bank, provisions are rising. You know, I think Abhishek was telling us one of the key accounts like MTNL could have perhaps slipped. We saw what happened with RBL Bank yesterday. So in the tier 2 lot, some of the numbers that have come, if the stocks are under your coverage, any thoughts?
You see, City Union Bank, I think first of all, their NIMs have been quite good. The provisions have been increased by them, so the PCR will improve, and some of the technology initiatives which they have taken. So they are likely to result in better growth in the coming, say, year or two. So we have actually upgraded City Union Bank to a buy, no big change in the target price. But however, the stock gives you a potential to make, say, 20-25% over the coming 12 to 18 months. So if you look at, say, all the mid-sized bank, I think City Union Bank is the one which looks good. And I think even Federal Bank is worth looking at. But I think the numbers are yet to come out and we will get more clarity. But yes, it is going to be very volatile times for, you can say, banks, because most of them are having NIM compression. Then there are doubts as far as your MFI book is concerned, many of these. So I think the volatility is going to be there in case of many of these banks.
Amnish, since you're talking about banks, what about the big boy HDFC Bank? The street is looking for pockets where to hide, stocks that have underperformed, valuations are okay. And now it appears that things are, the stars are aligning, so to call it. HDFC Bank, yes, it was an outperformer. It's done nothing for the last 24 months. Your view on it?
If you look at the long-term average, today HDFC Bank really looks attractive from the longer term. Yes, in the near term, the growth rate might be stunted. You have got, you can say the LDR is high. Now it is sub 100%, I think 99.8 for the current quarter. In the near term, yes, the issues are there. But if you are looking at, say, next 12 to 18 months, so HDFC Bank, I think the growth rate should start gradually picking up. That is one. Secondly, on price to book, the stock seems to be attractively priced. And given the fact that it has not done anything much, so from the hiding viewpoint, I think it's a good place to hide with the potential to make, I would say, decent money. But the viewpoint for some of these frontline banks, one should be looking at, say, 12 to 18 months kind of a viewpoint. In the near term, yes, because the valuations are very attractive and they are not showing any sort of froth. So there's a possibility that if the market correct, the correction in these stocks might be on the lower side.
Okay. All right. Amnish, stay on. We'll come back to you with some more questions, but a lot of earnings have been coming in. So let's straight away get to it. The first management and company on our radar is Cyient DLM. Now, Cyient DLM reported a performance that was more or less in line with street estimates for the second quarter. The revenue and EBITDA jumped more than 30%. The order book, however, declined 13%, but the defense segment witnessed growth of about 82% on a year-on-year basis. So what are the trends looking like for the second half? We have Anthony Montalbano, Chief Executive Officer at Cyient DLM. Thank you very much for joining in, sir. So if we could just start by talking about that dip in the order book, what are you expecting in the second half? How are you likely to end the year? And just give us some idea, because you've also done an acquisition recently. You've bought an EMS company based out of North America. So what's the thought process there between growing your international business?
Yes, absolutely. So yeah, to start with, it was a big quarter in terms of the acquisition of Altec, which does bring us into the North America market, and is our first manufacturing opportunity really outside of India. And we also believe that this specific capability really gives an expansion of our current business with the type of clients that we have today that we're supporting in India. This is an operation that is very complementary in terms of the type of capability into mission and safety critical electronics. And we believe that there is a very strong synergy case as we look at the business we have that can go into impact that operation. And then also they bring us a level of business diversity. As you mentioned, we are very solid in aero and defense. They also bring us more diversity in medical and industrial, which is some of their top clients, and with some top logos there. So that's an important piece of the business.
Anthony, sorry to come in over there because it's a short call. So just on the acquisition, I think you've paid about $23 million for this. What is the expectation in terms of synergies with respect to revenue? What is the current revenue size of this company? Is it profitable? And by when will that start reflecting in your numbers?
Yeah, we'll start showing the details on our next quarter's results. But then the numbers are very complementary. They have, the business is about a $35 to $40 million per year run rate is where it's at today, and it's providing similar EBITDAs of high single digits, low double digits, so 9-10% EBITDAs, which is in line with our business today. Right. So it's very complementary in terms of top and bottom line. When you look at the combined aspects of the business.
Anthony, hi, morning. So for the full company, including this acquisition, FY25, what would revenue growth and EBITDA margins be? And give us a sense for is asking for 26 a little too much? Or would you be able to?
Yeah, I think we'll start to provide some of the details next quarter, and that'll provide some impact on how that starts to look for the rest of the year. I will comment though regarding not counting the Altec at this point as far as how H2 is looking, including some of the questions on the order book. We do see a much stronger H2 in terms of delivering on the overall business that we have forecasted for the fiscal year, including the growth rates, and also H2 is when we also expect to see more of an impact on the order book. And this has also been another record quarter from a revenue perspective for us. So this continued revenue growth does, that's been a key driver for the business.
So the 30% you told us after the first quarter, it'll be more than the 30%? I mean, I'm not including this acquisition. You're saying H2 will be much stronger.
Our organic expectations are to provide a CAGR of about 30%. Overall growth, right? Last year we delivered, I believe, 43%. This year, we will not be at that high, but when you start looking at the combined growth rates over a 3-year period, our goal is to be delivering about 30%. And right now, the revenue that we are delivering and are forecasted to deliver for H2 should align to that.
All right. Hi, Anthony. Morning. Good to see you in. This is Nigel on this side. Give us a couple of more details with regard to Altec. For last year, did around $37 million with margins of around 10.5%. Say if you have to give us a 3-year time horizon, where do you see this number headed? From around 37 million, since the targeted market is high, there's a big opportunity out there as well. What should this entity grow at? And where do you see the margins headed as well? Scope for improvement because it's margin accretive.
Yes. No, it absolutely is. What I will comment is that we believe the specific addition will be complementary to our business overall. So, the growth rates that we have set for Cyient DLM are, we feel are pretty solid. And then when we also look globally...
you want to give us a number, Anthony? You want to give us a number from 37 million? Say in the next 3 years, do you see it go to that vicinity of around $60 million? Is that a possibility?
Yeah, we'll start to provide a little bit more outlook in the coming quarters on that. I think at this point, the goal is to get the integration in place and really bring the go-to-market pieces of the business, which are complementary. But they've had solid growth, solid bottom line.
Got it.
Been supporting that for decades. Yeah, so we're quite enthused.
You're sounding quite confident both on the organic and the inorganic side. But from a stock market perspective, the street would like to know what's the promoter's view on the company as well, because they had sold some stake, 14% stake in the month of August itself, and they bought their stake down from 66% to 52%. What are the communications? Are they done with their selling? Would they hold on to this 52%, or is there likely to be some more supply?
So at this point, there's definitely not any plans to further dilute the stake in Scient DLM, and as discussed, the where that money was used in the sale of that stake will actually drive some investments in semiconductor, and so that's more of a front end part of the business when you look at it from how products come to market. And even as that matures, it actually creates opportunities for DLM as well. So it's really it really provides more focus on the business by breaking out the semiconductor piece and being able to invest and scale that. And then we see downstream impact for Scient DLM as well.
Got it. Anthony, good to speak to you. Organically, you're sticking to your guidance with regard to the acquisition. You'll provide us color in the coming quarters. And as of now, the promoter entity doesn't plan on selling any more stake. Appreciate you speaking to us here on CNBC-TV18. Wishing you a good day ahead, Anthony.
Great. Thank you.
Well, for the time being, I'll tell you what, we'll slip into a short break. Technical experts waiting for us on the other side.
Okay, welcome back. We're looking at, of course, market ticking down to the pre-open session. Lots of movers yesterday, which actually more down than up. So let me actually address a few. Amnish, of course, is still with us. Amnish, weigh in on two names. One is India Mart. I don't know if you have coverage or if you've looked at this name. Stock sold off aggressively. And the other set is Tata Chemicals, which got ramped up because of that buzz or whatever around a potential listing of Tata Sons. No confirmation, nothing. But also, of course, I think what helped the move yesterday was the fact that it was in the F&O ban. It's out of the ban now. So just your sense.
Yeah, hi Prashant. First of all, no view on India Mart at this point of time. And as far as your Tata Chemicals is concerned, I think there is no fundamental reason which would suggest that the stock price should move up from here like this. I think the news around the listing of Tata Sons and you can see some changes around that has been around from quite some time. And I think the rub-off effect of that should be, I think, not only on Tata Chemicals, but on other Tata Group stocks, which doesn't seem to be there. So I think from that angle, slightly difficult call to take.
Okay, all right. We'll leave it there. Amnish, thank you very much for joining us and running us through all of that perspective. Thank you very much. Well, I think we'll take a quick commercial break here. We're going to come. Okay, I think what we'll do, we'll have the technical trades coming up. Mitesh and Sudarshan are joining us with exactly that. Gentlemen, good morning. Good to have both of you here. Mitesh, the sense now, I mean, big, hugely volatile day, but finally down about 100 points. What does one do this morning?
Good morning, Prashant. So I think I would say hanging on to the support level somehow. I think, just kind of managing to close above levels of 24,750 and in that zone of 24,750, 800, despite the fact that on 2-3 occasions, we have kind of breached that level on an intraday basis. So just holding on, but the structure hasn't improved. So, one, if you can continue holding on to this level, the one outcome could be that it could just chop around with not giving you a closing below 24,750, and then on the upside, 25,200 becomes the supply pivot point. And after a few days of choppy consolidation, we might look at an upside breakout. Two, in case you get a breakdown, which looks like a slightly more probable event right now, then I think we might correct to about 24,370, 350 zones.
Okay, all right, got it. Sudarshan, hi, morning to you as well. So what's the setup like and what are the index calls today?
Yeah, good morning. See, the Nifty is trying to find some kind of a direction and it's not succeeding. So we have this choppy market movement, we have volatile intraday moves. So there is no view on the market because it's already breached that 24,750 level. Now all we have to do, so what's the trade? The trade is that if the Nifty decides to go down, and it could easily, then I don't actually recommend going short. We can have volatile upswings in between. That will be difficult. If the Nifty stabilizes here and starts showing upside momentum, after it goes up a 50 or 100 points, then probably a buy is justified. But at current levels, it's just wait and watch.
Okay, wait and watch. Let's quickly get to stocks then, if the index view is not clear. Mitesh, morning. Your list for the day?
Good morning, Sulpi. I have a mix of buys and sells. On the buying side is HDFC Bank. In fact, that's one stock, which is the reason for the outperformance of the bank Nifty, and which is also managing to keep the Nifty, afloat above the support level. So HDFC Bank, I think, could test the recent highs of 1780. So buy here with a stop below 1700. A buy on Page Industries with a stop below 44,140 for targets of around 45, 300, 400. And a couple of sell calls. IOC is a sell with a stop at 163.5 for targets of 152. And Aditya Birla Fashion is a sell, a conditional sell. If it breaks 321.5, it's trading about a couple of points above that. So sell below 321.5 with a stop at 327.5 for a first target of 310.
All right, Sudarshan, let's get your picks as well.
Well, I'll start with Tata Chemicals, which Prashant was discussing in a different way. At least technically, Tata Chemicals remains a buying opportunity with a stop at 1130. I have one intraday short, that is Coforge, that had a big decline yesterday for whatever reason. Coforge is an intraday short with a stop above 7,200. Two more buy ideas, Eicher Motors, which is giving signs of life, consider buying with a stop under 47.40, and Axis Bank from the banking group. If at all the market needs to go up, wants to go up, the banks will outperform. Consider buying Axis Bank, stop under 1160.
Okay, Sudarshan and Mitesh, thank you very much for that. We'll talk again soon. We'll take a break. We are back with the pre-open session. We'll have the management of EPAC Durables joining us to talk about a tie-up that they have done. That's coming up in just a bit. Stay with us. Okay, welcome back. I think we're about a minute away from the pre-open session, so we'll get you the rates in a bit from now. Now, the big story, which I think it's the selling from FPIs have been so large that it's moved away from pink papers to the white papers in that sense, right? $10 billion worth of FII selling in October so far. Now, I had the opportunity to catch up with Manish Chokani on this and some other important topics. The consumer slowdown, which we've all been talking about, how real is it? And of course, the big one, which is a potential Trump presidency and what it may mean for markets. So listen in to some of that conversation.
A bit like 2008, except the base is very different. Much larger. We're 3.5 times of that time. And also the fact that there's a lot of domestic money, otherwise this would have been a deeper correction. Yeah. But having said that, foreigners own 15-16% of India. So it's about $800 billion at least of stock which they have. So they've sold 10 billion. It's like poor chaps have traded 1% of what they hold. We shouldn't be grudging them that. In the context, in the last 6 months alone, we've raised $30 billion in our markets, of which 15 has come from companies raising it for building new capacities or whatever. Right. But 15 has actually been promoter and private equity selling. So if this sort of selling can get absorbed, it creates confidence that this is actually a two-way street. I'm not trapped like I'm in China or in Africa. Now the worry is that with the K-shaped recovery, the top end has gone and bought their bigger homes and their bigger cars and their holidays. What happens to the bottom of the pyramid? That is the problem? It is a problem. And clearly...
It's coming into stock view.
It is in stock view. I don't think you're going to, once you bought a Mercedes, you're going to come back to the market 5 years later, right? Once you bought a larger home, you're coming back to the market 20 years later. And the pool of those top-end homes in India is still very tiny. Like I call it Australia, Philippines, and Africa. So the domestic wealth creation has been large. So it's not like consumption will fall off a cliff. But at certain point, you hit a stall speed because you've gone through the Australians and you've gone to the topper end of the Filipinos. And you can't keep drawing a straight line on an Excel sheet and say this will continue forever. So the asset allocation mix in favor of financials is for sure. But this rate of consumption growth is not, I think, so easy. You need a second wave of impulses to come out. And like I said, the first impulse wave has come. The second impulse wave, normally you get either a catalyst by way of an important industry or an important commodity going up, which probably will happen with precious metals, gold, silver and all, and there's a lot of it in India. That gives you another wealth effect and maybe another booster over there. But the government part which is lacking is on jobs, regulatory reform, skilling, which they're trying to do with the apprenticeship thing. If I go back to financials is number one. Okay. This whole energy, renewable energy kind of is area number 2. The whole hard assets is area number 3. And in that, what else have I done recently? Let me think. So I have renewables. I have an airline stock, for example, believe it or not, that there is a, hopefully a revival in that as well. I mean, from an individual investor perspective, there's enough to do. And it's not a market which is going to crash and therefore you say, I want to sit on cash. Next Diwali, if we get double digits from the index, I would be surprised. I think at some point, and there are a lot of stocks. Even remember, we've spoken in the past about EMS. Some EMS stocks are down 40%. And it's not like the story's over there. Some of them are over 100 multiple. Some of them are not.
Okay, pretty interesting. So, Mr. Chokhani there is saying that there's still plenty of ideas going around in the market. But Prashant, back to the point on consumer. So, what was the exact view? Because he was giving this analogy of Australia and Philippines.
So, yeah, I mean, so the top end are Australians. And he says, well, that's done. Right?
Yeah.
They all maxed out. I mean, the spends are maxed out. And the second rung is the Filipinos. He says the upper end of basically the upper middle class, that's done. The middle class is about 100 million.
Now we're talking mass, sort of mass consumption.
But mass is even lower, right?
Okay.
I mean, that's essentially the Africans, what he referred to, right? He says, well, and that is where the problem is. So this K-shape which we are talking about is now after about 2-3 years of the top end of, absolutely the top end and the upper layer of the middle class consuming all they can. I mean, this slowdown is coming into view and he thinks it probably will last because you're not going to, as you said, I mean, right, simple stuff. But I think what I found interesting about that is the fact that he says you need another wealth effect. Stock market wealth effect has been huge. You need a new source of this wealth impulse and that may come from precious metals. Indians own a lot of gold. Gold prices are going up sharply.
30%
His call is gold will go even higher.
Whoa,
that can give a sort of another new impetus for people to feel wealthy. That's the wealth effect, to be able to go out and consume and spend.
That's an interesting angle, and of course you'll hear more from that interview as the day progresses. But right now, let's put the spotlight on the big story of the day. It's a bumper listing, the largest ever IPO in India, and a listing from a large auto OEM. Hyundai Motors is on the radar. We have Parikshit joining in. He's been tracking the entire trajectory. And a lot of mixed views, Parikshit, on this one. Tepid listing, quiet listing. But I think it's more than today. This is a big story, right? That's turning a milestone.
Indeed, and it is the largest ever IPO in India's history. Hyundai is raising $3.3 billion from the IPO of its India entity. We're at the NSE right now, and the pre-listing ceremony is going to begin shortly with speeches from the management. You're absolutely right. The retail investor sentiment towards the IPO subscription had been rather muted. It had been around 44% of the retail portion. A lukewarm response indeed, and that's what because all the proceeds from this IPO are going to the parent entity, and it's not exactly clear how India Hyundai will gain out of this IPO. But what bankers of the company and certain brokerages this morning are saying that Hyundai has been a company which has been quick to predict market trends in terms of technology, in terms of the move towards SUVs. They have a favorable product mix. In the past, we've asked them about the lack of a hybrid powertrain, a flex fuel powertrain, and they said that they have all these technologies in South Korea, and if the market demands, they can immediately deploy such products in the country. So the strength of the Korean parent, a strong portfolio mix, the fact that they will have 4 new EVs by 2030, they will be investing in charging infrastructure, is something that people are looking positively at, and many bankers believe that this will add long-term value to the company. So even though it might be a modest debut on Dalal Street this morning, the long-term health of the company, the long-term trajectory of the company is also intact, even though the festive sentiment right now for the passenger vehicle segment is slightly muted. We may just say 4 to 5% growth for the whole fiscal, but at the end of the day, brokerages are expecting somewhere between 6 to 8% growth for the industry over the next few years.
Okay, all right, Parikshit, thank you very much for giving us that perspective. And of course, we're going to come back to you when that bell is sounded out at 10 a.m. when that mega listing does take place. But in the meantime, before we hit market opening, let's quickly get in another corporate conversation going. EPAC Durables is in focus. The company is looking at joining forces with Hisense India to manufacture air conditioners and other small appliances as well. To talk about this, we have with us Ajay Singhania, MD and CEO at EPAC Durables. Mr. Singhania, thanks for joining in. So we know that you're coming together. You want to do the whole range, room ACs, and I think appliances like washing machines, etc. And you're setting up a new manufacturing facility for this, I think, in Andhra Pradesh. But what's going to be the investment involved? And is Hisense only bringing the technological know-how, or are they also bringing in some money? Give us more granular details on this alliance.
Yeah, so good morning. See, first of all, this new alliance is about EPAC setting up a brand new dedicated manufacturing facility for Hisense at our Sri City location. So this would be like a subsidiary of EPAC. And while we invest close to 30 million in first phase, the idea is to set up a capacity of at least 1 million air conditions to be produced by 27-28. And the production would start from June of 25. Along with air conditions, going forward, washing machines, and then even phase 2 refrigerator and other small appliances are also planned. While we invest in manufacturing, Hisense would invest in toolings, designs, the technology, and the market. So more important is the market, because India is like a new venture for them. So the whole idea is to create the market in India for us to supply this product. And then going forward, we are also looking at expanding the market beyond India to the globe. So the Hisense has this view of expanding the Make in India product reach outside of.
No, we understand that this is, Make in India for the world. But Ajay, you mentioned 30 million in the first phase. Is that $30 million? Did you mean
$30 million
in the first phase? So when does the second phase kick in? And what's the total investment we're talking about over how many years?
See, the idea is to keep growing. So first phase is something which has now been chopped out, that we'll start with an initial investment of close to $30 million. And then going forward, definitely more investments would be required as we build up capacities for refrigerator and other products. So more investments would come in. But to begin with,
Revenue, Ajay, I'm sorry pressing you because we're just running into market opening. First phase, you're putting in 30 million. What's the revenue projection on this 30 million?
See, like we shared yesterday, we are looking at achieving a revenue of at least $1 billion in the next 4 to 5 years. So that's the whole idea. With a million ACs and 500,000 of washing machines reaching by FY 27-28, we definitely believe that within 3 to 4 years, a top line of $1 billion can be achieved with this kind of investment.
Okay, got that.
At the same time, more important for EPAC is that our current manufacturing facilities, which are adjacent to the new facility coming up, would be further utilized to supply components to this new facility. So it would lead to better utilization of our current facilities in terms of capacities, in terms of components getting supplied to the new facility.
Okay, tell us about margins. I mean, are the margins going to be in the ballpark of, I think, in the last quarter, you were at about 6.7%. So is that the target range here as well? How is this going to be?
See, year-ended, so rather than quarterly results, we look at the last year, we achieved almost 8.11 kind of EBITDA margins. So our guidance has been that we'll try to retain similar margins here, and going forward with this alliance also, we are looking at getting similar margins. But at the same time, what's more important for us is getting access to their technology, their sourcing capabilities, which will in future definitely help us improve our margins on the current business as well.
Okay, all right. Thanks a lot for joining in, Ajay. Well, that's the big breaking news that's come in there. Ambuja Cements will be acquiring Orient Cement. The stock in the last 2 days has moved up from around 300 rupees to 350. But as we speak, they're going to be acquiring this stake for close to around 395 rupees. Orient Cement is a stock that we should be looking at. I think the total valuation that they're talking about is close to 8,100 crores. And that 8,100 crores will be for a capacity of around 8.5 million tons. So very approximately, it appears that they're going to be spending for 1 million tons. They're going to be spending close to around 1,000 crores, very, very approximately. For Orient Cement, the problem is they haven't been able to add capacity. And the street was sniffing this, for the last many, many months, that it's going to be a bit of a battle. It'll be interesting to see what happens from here on, because one would have thought that actually Orient Cement would have folded it up into Ultratech Cement. But that's not the case, because it seems that Ambuja Cements has gone ahead and paid top dollar for this asset. Remember, it's a very, very good asset, and it has capacity that they can go ahead and add as well. From around that 8.5 million tons, it could go to around 11.5 million tons or thereabouts. That was already on the drawing board with regard to capacity coming in Karnataka. But this is the big news that's coming in there. Orient Cement, to give you a few more details, they have a lot of capacity. Most of their sales are in South as well as in West. So that's about the split out there. And also, it's a profitable asset. It's been doing quite well over the recent past, but growth has been the issue out there. We'll try to get you some further details. But
I was just looking at, and I remember, Nigel, because when you had that conversation with the management and to get sort of the insight into the psyche, it was very clear that the Adanis have big, ambitious plans in the cement space. There's literally the Birlas, and now you have the Adanis. Some more, by the way, details from the release. So the transaction's happening at 395 rupees per share, 395.4. And the release says that it will take Adani's total capacity to 97.4 MTPA, and it will help them get to that target of 100 MTPA by March of 2025. That's the volume assessment that they have at this point in time.
So one more acquisition under Adani's belt, right? I mean, and this was, in a sense, there was strong buzz for, and we discussed it, Nigel. A very strong buzz that this is sort of may come. But the point is, it had been coming for so long that I think from a market perspective, so you had one big run up in the stock price on expectation that something was coming, and then of course it all fizzled out. And in the last 4-5 sessions, if you look at it, the stock moved up from about 290-ish to about 350, which is the price yesterday. So in 4 sessions flat, it had about a 16% kind of a move. So the buzz was there. And it's now sort of finally come through. The pre-open, I think, the news hit the screen once the pre-open ended, I think. So, you're not seeing a reflection of the move in the pre-open. So this is still largely a pre-deal prices that you're seeing. And I think once the market opens in the next 2 minutes or so, we'll have some more we'll have the actual reaction starting to come through. So acquisition to be completed, some more timelines, etc. coming through. They aim to acquire about 8.9% from certain public shareholders of Orient Cements. So perhaps, deal with promoters, but at the same time dealing with some other large individual shareholders or institutional shareholders perhaps to acquire more of the company.
Just to give you a few more details, Prashant, if you look at it, 8.5 million tons goes for around 8,100 crores. So it would mean that an EV per ton, it is at around $115 per ton. But what the management is saying that it'll add close to 16.6 million tons, because they're saying 8.5 million tons is operational and already 8.1 million tons is ready to execute. So we'll have to find out, how much are they going to be incurring for that. But the important part is it provides 6 million tons potential addition capacity in North India, leveraging Orient Cement's high quality limestone reserves in Rajasthan as well. So as of now, the valuations don't appear cheap at all, $115 per ton. And every time the management, I recall I had gone to Hyderabad, which is where they have their office. And I said, will you sell if the check is good enough? It appears the check is good enough, because at that point of time, the stock was at around 130 rupees per share.
Okay. Now, never a dull day. Big acquisition story breaking this morning, and we'll continue to get your perspective. Get you a couple of analyst reactions and experts as well as we go along. But we got markets to track. It's absolutely flat. So 24,760 is where the Nifty is opening at. You got the Nifty Bank, which is up about 0.13%, 51,893. And you got the sensex, which is starting absolutely flat as well. Mid-cap index is up about 0.14%. And that was where there was the crunching fall. You got the first reactions on Ambuja, which is it ticked in the green and then ticked back into the red. But I think the name to watch, of course, is Orient. And that'll also come up on your screens. A quick look and, then we'll kind of move around. Yeah, so 5% move. So 290 to 370 in 5 days, basically. That's what's happening. There's a 16 rupee up move on Orient Cement. Actually, we should track Orient here on the screen. The Nifty heat map is also on your screen. And it is, I think, evenly split between sort of gainers and losers. And by the way, the market has moved up a little bit from the lows, and we're up about 15 or 16 points at this point. Surabhi. So
the transaction is happening at 395. I mean, Adani's are buying at 395. The stock currently, obviously, is still, there's a gap about at 369, 370. So there's that gap that the stock has been trying to fill, moving in the last couple of days as well. By the way, CG Power has recovered very nicely. Remember the 6% cut yesterday? This morning, it's up about 4.5%. So that's an interesting reaction. EPAC Durables, you just heard the management speak to us a while back on that high sense alliance, 5% up on EPAC Durables. City Union Bank is the stock of the morning, 8% higher because it's come out with pristine numbers, no complaints with growth, with asset quality provisions, nothing. And the market's really taking that with both hands. Ola Electric, there's a bit of a recovery as well, 3.5% higher, as it clarifies that it's apparently, the claim is it's settled about 99% of the consumer complaints. Those are the early newsmakers. Back to the large cap screen just to track the moves over here. Okay, on the upside, on the Nifty then, Bharti Airtel, Power Grid, Infosys, Ultratech Cement, Tech Mahindra. These are the names on the upside. There's Adani Ports. A little bit of, basically Reliance is also supporting, and there's a little bit of buying on the tech side, Tech Mahindra, Infosys. These are names on the upside, but on the downside, you've got Kotak Mahindra Bank still sulking, down about 1%. There's a Bajaj Auto cooling off after yesterday's 4% move. And SBI Life and HDFC Life, the life insurers are starting the day on a quiet note. That's the split on the Nifty, very sort of soft out there. But, now it's about 30 points higher, 40 points higher. So let's see if the bulls can build on this.
Okay, all right. We got, Anand Sharma joining us. He's head of PMS and AIF investments at ICICI Pru AMC. He's a market master of the day. Anand, good to have you with us here. Thanks very much for your time. The cement deal, which is breaking, another one under Adani's belt, Ambuja acquiring Orient Cements. What do you make of it? I mean, you're going to comment on this transaction or the space? You're welcome to. Go on.
Hi, very good morning, and thanks for having me here. So what's happening in the market in general, and more particularly, instead of creating a lot of capacities, the equity market valuations are so high and equity is so cheap, we are seeing a heightened M&A activity, no doubt about it. This sector has been consolidating for almost decades, if not years, and for a couple of decades where the large players are becoming larger. So I think to that extent, today where we stand on cement sector, the profitability is fairly low. Demand has been sluggish for last couple of quarters. So all those apart, what is keeping the market excited about this sector remains the M&A activities.
Anand, hi, morning. So earnings have started trickling in, and that's the new debate on the street, right? Whether it's going to be worse than the subdued expectations or not. And very mixed early trends coming in. What's your thought? I mean, are we going to see big downgrades post this season? What are you working with?
Indeed, the results indeed are weak, barring banks, which have been, again, there it's a mixed bag, and some of the banks have been able to surprise positively. But barring banks, I think most of the cases we are seeing challenges as far as earnings is concerned. So if you look at market and step back, I think last 4 years have been earnings-led market movement. More so recently, I think our belief is the markets is actually moving ahead of earnings, and there can be some disappointment. So where we stand today, I think some correction in the equity markets will make it a lot more safer, given that our outlook on earnings, especially for this quarter, next quarter, remains subdued. We'll need to see as we move forward what sort of steps government takes to stimulate the economy. Or what are the benefits? Because what we are seeing is US, Europe, China, all three large blocks of economies are also stimulating. They are cutting interest rates at the same time. So we'll have to be mindful of what's happening in the global recovery, especially China, and at the same time what we do further to boost consumption, particularly, which has been very weak for a while now in this country. So that's the challenge today. As we speak, that earnings are soft and might be softer, and the market's been at the all-time high.
All right. I mean, a lot riding on this festive season, right? Because H1 has been soft, H2 and this festive season, a lot riding in that sense. Just a few other stocks, Anand, I want to highlight before I come to you for more questions. City Union Bank, Surabhi, I don't know if you highlighted 9%. It's a big mover on big volumes. If we can have these stocks up, actually, it's the second largest volume traded name across on the NSE. If you can have those stock up, please. Yeah. So 165 on City Union Bank. Look at that. Orient, by the way, has completely fizzled out. It's the biggest volume mover, but it started 4-5% higher. It's up about 1.25%. But volumes, but price has come off. CG Power should be highlighted, 5% now on CG Power, 8.15. It sold off 6% yesterday. Ola Electric is up about 2%, so 84 rupees. There is Shree Cements, which is up 2%. So, I mean, actually, we should keep an eye out on some of the other cement names as well. So that is up 2% right now. Shree, that is. Adani Green is up 1%. Deepak Fertilizer is up 2%. Newland Laboratories is up 2.5%. Just Dial is up about 1.5%. Jyoti Laboratories, but I mean, volumes are tracking lower. Market breadth is sort of firmly down, 2:1 in favor of declines right now in terms of advances declines. And to look at what is down, Mazgaon Dock, which went up yesterday sharply, is down 4%, is the biggest volume-led loser. Amber, which was, I think, 20% higher, limit up. It's the second biggest volume-led loser. It's down 4% though, but big volumes. PNC Infra was limit down yesterday. It is down another 11% this morning. PNC Infra is up on, you look at the volumes, 4 million shares on PNC Infra. And I was talking about Tata Chemicals in the morning. Tata Chemicals is down 3%. I mean, it went up sharply yesterday, but it was in the F&O ban. It's out of the ban. And as a result, it's, you're able to sort of take a trade one way or the other. It's down 3.5%. 361, poor numbers. Vamakshi had highlighted 4% cut there. BEML is down 4%. Garden Reach went up sharply. That's down about 3% or so. And there is Gravita India, a company you will hear from in the next 20 minutes. That stock is down about 5% or so. Viatech Vabag is another one. It went down 6%. It's down another 3% this morning. Sterling Wilson Solar is down to 600 rupees. Had a sharp move. Sold off yesterday a little bit, 2.5%. But that is down this morning as well. Anand, I mean, it's losing money is one thing, but seeing some of your gains erode is also painful. Potential sort of paper gains which you kind of sit on, but that's part of the game, Anand. But have you taken money off the table anywhere where gains have been outsized and you really thought that maybe it was a bit too much?
Indeed, that's all in the active funds management. We keep on doing that. But just to touch upon what you've been talking about, I think it's not new. While the Nifty touched all-time high sometime in third week of September, even at that point of time, we had 255 stocks out of Nifty 500, which are down 10%. If I'm not wrong, more than 90 stocks were actually down more than 30% from their all-time high. So notwithstanding the way Nifty was, I think internally the market was fairly correcting since the election result. So clearly, it's not surprising to us that the broader market is sort of soft or maybe declining, while Nifty is holding on basis few sectors or a couple of companies which are heavyweights in the index. So coming back, that's what I was sort of talking about, that the earnings is, I think, what will be looked out for. This quarter might be weak, but we will have global headwinds turning into global tailwinds. We will have recovery from festive and otherwise, post-Rabi crop. And the second half is always a busy season. So we can have some bit of pickup in the capex cycle also. So all in all, I think all focus on fundamentals, focus on economy, which should augur well
Got it. By the way, let's just go back to City Union Bank for a bit. This 10% surge on the stock, and I just want to put the numbers out there once again. In a season where asset quality stress is the big worry point and watch point for most lenders, City Union Bank has actually done really well. If you look at the percentage, I mean, gross NPS as a percentage, that number has actually come down from 3.88%, so almost 3.9% has come down to about 3.5%. And unlike a lot of others where slippages are just shooting through the roof, going up by 100, 120%, that's not the case with City Union Bank. The slippage ratios again come down to 1.47% from 1.53%. And all this coupled with an expansion in margins. Remember, We went in the quarter, again, with the worry about how much margin compression will banks start seeing. Well, no such issues for City Union because they've actually managed to expand the NIM just that little bit. And that explains the surge on the stock today. Anand, on the lenders, so I mean, like I've been highlighting, it's very, very mixed trends, right? Kotak had its own issues, and then, there's HDFC Bank, which obviously is standing tall this quarter. What are you working with? Would you buy anything afresh? Would you stay away? What's the advice? Because it's no longer a homogeneous universe.
Indeed, I think stock picking will be the key across sectors and notwithstanding even in banking. And look, the banking sector actually has come a long way from where it was in terms of asset quality. Obviously, the growth has been subdued on the back of slow growth in the deposit market. But in terms of asset quality, I think the Indian banking industry today stands fairly comfortable. Across banks, be it state-owned banks or be it in private banks, the gross NPA and the net NPA numbers have come off significantly over the last 4 years, and that augurs very well. The capital adequacy is strong. Margins got elevated and now they've sort of stabilized. So I think banking as a sector to us looks like one of those quality businesses, franchise businesses, again, bottom up, depending on which bank we're talking about, where the valuations are still reasonable. Any comparable sector with such ROE and such growth today is trading at a much higher multiples, be it price to earning or price to book. So I think we remain overweight as we speak today on banking sector in general and select banks in particular, which we do a lot of bottom up research.
Yeah, but this is a season of sharp reactions. RBL down 17 yesterday, City Union up 10% today, Kotak down 5%. So it's really all over the place. Let's quickly actually bring in our colleague Abhishek to detail out why City Union Bank has really hit the bullseye in the second quarter. Abhishek.
Well, it's against the trend in the industry with respect to, slippages and asset quality deteriorating for many players. City Union Bank, on the other hand, has actually improved its asset quality, lowered the slippages, and improved its net interest margin as well, which is heartening to see. So if you take a look, the business momentum has been pretty healthy for them. 4.5% growth with respect to quarter-on-quarter deposit momentum and about 2.5% loan growth that they have had. And this has augured well for them. Net interest margin has improved to 3.67% versus 3.54% in the previous quarter. And I think amongst all the lenders, this is the highest net interest margin improvement in a lender that you are seeing in Q2 FY25 on a sequential basis. NII is up 6.8% quarter-on-quarter. PAT is up 7.8% quarter-on-quarter. The annualized slippage ratio has declined on a sequential basis to 1.47% versus 1.53% in the previous quarter. Even their asset quality has improved massively to 3.54% gross NPA ratio in Q2 FY25 when compared to 3.88% in the previous quarter. Macquarie has written on City Union Bank they have an outperformance rating and a target price of 185 per share. They say that growth engine has turned on. They expect ROA to remain at about 1.5 to 1.8% despite higher credit costs that they foresee going ahead. Risk reward looks favorable given the fact that there is potential growth right now and ROA trajectory is good right now. Back to you.
Okay, all right. Got it. Abhishek, thank you very much for that. And Anand, we'll thank you as well for joining us this morning and giving us some thoughts on the market setup right now. The market seems to be okay. I mean, just to flag off the Nifty once again, 38 points higher. One stock that's definitely capturing the market's imagination with its sharp moves and the performance is CG Power. Remember, yesterday after the results came in, the stock was down almost 5%. Today, it's undoing a lot of that cut. Now, the whole chatter around CG Power in the last, I think, 12 to 14 hours has been on margins. The stock fell yesterday because the margins cooled off quite a bit, coming in down to the 12% mark versus 15%. But in the conference call, the management is saying that, the margins will go back to earlier levels and perhaps this is a one-off. So let's start right there. We have plenty to discuss with Mr. Amar Kaul, MD and CEO of CG Power and Industrial Solutions. Great to have you, Mr. Kaul. First chat. Thanks for joining in. So let's really start there and get the whole market concern out of the way, and then we'll talk about the big picture. On margins, the dip, I think, happened in the industrial systems business, right? So what makes you confident that this will turn around, in how much time, And what is the target margin level? Let's say exit FY25, what is the margin level that you will target at the blended company level?
Right. So if you see, thanks for having me here. Important is to go a little deeper into what are the margin story there. So what you see there, a dip is not truly dip because this is more of one-off. And the investment that is a special investment that we have done into strategic businesses, right from acquisition expenses to developing our future potential, both in industrial as well as for the power business, and that's where you have a dip seen there. But if you look at, honestly, if I take out those expenses and look at the adjusted PBT, you go back to normal. So honestly, I'll not be worried about the industrial business so far, and there's a pretty strong strategy behind it.
So you were at 14% margin last year, full year margin. So when you say this is a one-off and you go back to normal, then what's a normal range? What will you target by the end of the year?
So we will be going, of course, it will not be forward-looking numbers to this, but I think important is the action that we are taking right from our go-to-market strategy. Now, industrial, we have been saying, okay, market has not been so good, but what we are doing is control what we can control. And that is something like go-to-market strategy, acting on the areas where we have not been present, and that's where we're going and opening the doors. And also ring-fencing the customer with the full solution. Rather than being a product company, we want to be there as a solution company and on energy efficiency area.
Yeah.
So that's going to drive. And second area that we are strongly focusing
Amar,
on.
hi, morning. Amar, we have a long run. We have questions. Could you? Sorry to push, Prashant here. Morning, and good to see you again. What can margins be? Give us a sense. How much can the recovery be? Looking for a number.
Yeah, so it'll go back to where it was probably a quarter or 2 quarters back. So, and it'll keep improving from there on.
So same quarter last year, you were at 15%. I mean, I'm saying quarter. But at the end of the year, full year, you were at 14%. So can we expect 15%?
It'll go somewhere in that range, yeah.
Closer to 15%.
Okay.
Let me touch upon the other thing, which is the board approval to raise money, 3,500 crore QIP. What is, so you already have about 1,300 crores of cash on the balance sheet. So what is the need for the QIP? Give us a sense, and where will this money be used to? When are you planning to do this? And could you give us a sense of, why? Yeah.
So yes, your point is right. We do have about 1,300 plus crores of cash sitting there, and we have the investment commitments. If you see in the semiconductor area, we already have made commitments for acquisition of radio frequency component business. So there's a commitment on that. There are more potential acquisitions in the pipeline to keep growing on that. And then when we looked at the cash flow at the end of the year with those commitments, so we'll be at an area which may become a question at some stage towards the end of the year. And the expansion we want to do both in the power sector as well as on the industrial side. And you'll see those things coming up because the demand is so huge. Even with more and more investments, we need to still expand the capacity. So today, if you see, yesterday the board approved up to 40,000 MVA capacity. I think we would look forward to doubling it in next 1 to 2 years. So those investments we'll need this money for.
All right. Hi, Amar. Good morning and good to see you in. This is Nigel on this side. So break it up for us. You have 1,300 crores. You're probably looking to raise 3,500 crores. So the 4,800 crores, how much of it will be used for CAPEX? How much of it will be used for inorganic?
So see, right now our commitment of about 1,300 crore plus is on the acquisitions and only on the acquisition piece of this. And plus, as I said, there's a pipeline of candidates that we are looking at for potential acquisitions as well. And then I would say approximately we need at least the visibility that I have right now is almost 1,500 crores additional immediately on the capacity expansion with the way market is going.
Got it. All right. Amar, CG Tronics, it contributed only around 20 crores to the top line because obviously that acquisition just got closed out. So, how do you see this asset scaling up? Because the targeted market is massive. So what would the revenue targets be on this asset?
So see, it's a step-by-step, we need to have patience for this coverage. The good news is we got a small development order from Railways coverage locomotive, which, should get executed in 9 to 10 months. Another tender has opened for 7,500 crores, which we have participated. Hopefully, in between December, January, that should get materialized. And so that's what starts the whole journey. And the potential that we see in this company and the synergies with the rest of the CG business can be phenomenal. So I cannot give you the number right now on 20 crore, but I think it's just the beginning of the bigger things to come in future.
So on a quarterly run rate, it should start clocking around 40 crores odd?
Oh yeah, I think that should be easily cut. I will be much more than that.
Okay, you want to give us a number on a quarterly run rate? What should we brace for?
Not right now, any number on that, because as I said, 7,500 crores is the tender. Even if we get 10% out of that, which has to be executed in 12 months' time, you can do the math.
All right, very quickly, with regard to your vision for the company since you've taken over, you're talking about capacity addition, you've done some inorganic growth, and also you're looking at some diversification. Give and take everything, I'm reading a couple of brokerage notes. They are saying that the earnings should compound by around 30% over the next 3 to 5 years. Doable?
Absolutely. I respect your shareholder investors' opinion as well.
But
this I just want to go back to the acquisition bit. So you said 1,300 crore for acquisitions. You said you have a pipeline of acquisitions, and capex will require about 1,500 crores.
Yeah, approximately at this point of time. The market is pretty dynamic, so we'll keep adding on.
And the acquisition and this pipeline would be in what area? Because you're kind of diversifying away from just being you already have, not away from transformers, right? So could you give us a sense of what the pipeline consists of? What businesses? What kind of businesses? What segments are you looking at?
If you see, yes, we forayed into semiconductor industry, which is, of course, the future of the industry. And we are not getting only the manufacturing and testing into the country, but we are also getting the design capability so that we are on its own. And if you see semiconductor, it's used everywhere, right? We buy IGBTs today, we import it from outside the country. All that is going to be manufactured here in the country. So we'll keep expanding and investing into those areas to make sure there are synergies across the overall CG.
So, that's exactly what I was coming to, because to get into semiconductor design, you acquired a small company called Renesas, right? So what should we expect on semiconductor? There's the OSAT facility construction that I think is underway already. Give us some timelines. And then what is exactly the thinking with respect to getting into the design side of it? Because that's obviously where the higher margins are. In terms of expecting some revenue, what are the timelines you're working with? And out of this money that you're raising, so 3,500 crores is the QIP money, then there's cash on the book. If you could give a rough breakup, how much towards, say, organic or inorganic growth in semiconductors, how much towards your traditional business? Some idea of how you're going to use the money, capital allocation over the next, say, 1 to 2 years.
So if you see, the OSAT business is already progressing. The construction is on way. The management team is already in place. And as per the plan, 2026 is when we'll see the revenue coming out of that. And that's absolutely on the time that we have. Now with the design acquisition of Renesas for radio frequency components business, that opens another area. Now again, obviously it's under the regulatory approvals, which will take, in my opinion, 4 to 6 months at least, because there are multiple agencies to get this together. So having said that, the breakup that I said right now, the clear visibility that I have is almost 1,500 crores we will be needing for capacity expansions, which is internal. We already have commitment for almost 1,300 crores for these acquisitions, investing into those. And then we want to make sure that we are not running out of cash. And that's the reason for raising the money, QIP.
So 1,500 crores towards, internal expansion of existing businesses, 1,300 crores towards acquisitions. Can you, give us a breakup in terms of how much semiconductor, how much, for instance, the railways, which is becoming such a huge part of your business. Do you have that visibility right now?
So the breakup is not very clear right now. That's what I said, it's the high order figure. And as we get clarity and we keep talking, we'll keep sharing with you.
All right, Amar, it's good speaking to you today. You have taken over and there's a lot of responsibility on you. This is a stock that was at around 10-15 rupees a few years ago. It's at 800 rupees, but as you've mentioned, you have a long runway in terms of your capacity that you're putting up, inorganic growth, as well as diversification. We're looking forward to chatting up with you in the coming quarters as well. Thanks a lot for joining in. Well, let's get back to the big deal that was just announced. Orient Cement getting gobbled up by the Adani Group. Well, the deal has been done at a valuation of around $113, $114 per ton. Take a look at the stock prices before we get our analyst who's going to join in. Orient Cement, massive delivery-based buying in the last few days. The stock is down 2% now. Just take a look at it. The intraday chart actually should come up for you. And Ambuja Cements, they are paying top dollar for this asset. You know, $115 per ton. That's quite on the higher side. If you look at it. But to help us out with a quick analysis on that front, we have Jyoti Gupta, the Senior Research Analyst, Nirmal Bang Institutional Equities, who joins us. Hi, Jyoti. Good morning. Thanks a lot for joining in. What do you make of this asset? It seems the street clearly sniffed it, so we're not seeing that big positive reaction. But at around $113, $114 per ton, what do you make of it?
Thank you so much, Nigel, for having me here. The deal was almost through 1.5 months back, what I sense, and that's why there was a bit volatility in the stocks. So if you see, on the face of it, this deal looks expensive, but if you look at what Ambuja is going through, I think it makes a lot of sense, because what the company really is facing is clinker shortage. They don't have reserves. ACC has aging plants. They have consumed their limestone reserves for over 65 years. What they really need is reserves. So if you look at it, I mean, in terms of reserves, I think it's a fair deal. Yes, expensive, but it's a fair deal. So, and of course, it will give a lot of, good plants. I think good plants, efficient plants is a bonus in this case. Had it been any other deal, possibly it would have sounded expensive to me, but not at this current valuation, because they've got good reserves.
Okay, all right. So you're saying that the valuation is on the higher side, but is justifiable because of the kind of asset. Is that correct, Jyoti?
Yes, because Ambuja doesn't have reserves. ACC is a drag in terms of their cost. They need to optimize on their cost, and if they have to achieve a 500 rupee per ton improvement in their cost, they need plants which are proximate to markets and need enough reserves to to make cement and be able to cater to the proximate markets.
Jyoti, you have had your ear on the ground, and me too. The point that could be a deal breaker, so to call it, was this mine in Rajasthan that they have, the limestone mine. And the street was wondering whether or not the acquirer will be able to take that mine. Now, we have the Adani Cement press release, which is saying that they have this mine in Rajasthan and they can add another 6 million tons. So they believe it's doable. Do you think that everything is clear now and they get this mine all clear?
Actually, Orient had a surface right. They were supposed to get surface rights for this mine by FY24 end. I believe this mine would be transferred to them. Should not be a problem. They will get.
So you don't believe it's an issue?
It's not an issue, right? In fact, what really was the issue was the reserves in Telangana, where they were actually looking for forest clearance. I think that is where that was a problem. I think that is resolved, I believe.
So you believe that it will get the regulatory clearance? That will not be a deal breaker now?
Shouldn't be a problem.
Jyoti, I want you to comment on this as well. We recall when Adani Cement went ahead and bought Sanghi Industries, there was this big guidance that was put up, and not all of that has played out. But, because they did that deal with Sanghi Industries and the profitability was limited to some extent. Now, on Orient Cement, they are saying that they expect the ROS to be at around 15%, and they're expecting the EBITDA per ton to go to 1,500 rupees per ton. You buy that? You think that's possible?
So you see, just buying one asset does not provide you with 1,500 rupee per ton. You see, there'll be a lot of changes that would require to be done at the strategic standpoint for Ambuja. Because some plants of ACC which have aged, which have kilns over 80 years, there is a drag in terms of cost. So obviously, achieving 1,500 EBITDA per ton at a console level without closing a few ACC plants will not be possible. You will see those kinds of numbers only by end of FY27 or maybe mid of FY27, once you have completed a consolidation, which I believe should be in the second half. By end of first half of FY26, you will see, I believe you will hear some more acquisitions as well. And the other thing is, Rajasthan results is not coming to immediately. It will eventually come to you in maybe in 3 quarters time or whatever. So till that time, you still need to optimize on Sanghi. There is some issue on the second line in terms of Sanghi, which they are going through. you know that currently they are stuck with their mines in the south, where I believe the mine in Wadi is closed. There is a struggle in terms of clinker in Karnataka and also some plant in the east. I think overall has to be a lot of strategic changes that needs to be done in terms of optimizing. Immediately 1500 per ton, no. This will come over a period of time, maybe by end of FY, maybe in the beginning of FY27. You can. This is very much possible to happen.
They're guiding for that, FY27 itself. Jyoti, final question before we let you go. Whenever there is a deal, you have party A doing a deal with party B, but people say, what about party C, D, E, F? Because then they say, this deal is done at around $115 per ton. That asset is available at $50, $60 per ton. And in South, there could be many sellers because profitability of these companies, my rough estimate tells me it will go down to around 200-300 rupees per ton in this past quarter at best. Some of them could even report a loss. Now you have a big buyer who's bought Orient Cement. Do you think some of them could come to the table? Could there be any potential assets that get gobbled up in the coming months? I believe that, in West India, there could be one asset that could get folded up. I think both of us would understand which that asset could be, which there has been a rumor for a long time. But in South, do you think that one of these assets could get picked up and now it gives you some valuation comfort with them?
Yes, actually, Adani is already in discussion with a couple of assets. We just have to wait and watch which one is going to close down. So yes, and those assets are bleeding. I think what you should look at when Adani is buying, please don't look at the plant and machinery. Even when we used to look at, when we were valuing, we're not looking at plant and machinery, we are looking at the reserves. If you have reserves, which is as good as 50 years or lasts you at least 60, 70 years, is what the valuation. And I think that makes a lot of sense. So be prepared. I believe there are a couple of deals which are going to close by first half of FY26, because 180 million ton that he's saying will also require you to close a few plants in ACC, or rather be replaced by new capacities. So what you're looking at in South, and I also know what was the bids which are being offered. I think it'll be a fair deal as long as you have enough reserves. I think it makes a lot of sense too. We will see a few deals coming up in the next 6-7 months.
Jyoti, it's always such a pleasure listening to you, and you bring such fresh perspective. Prashant and Nigel, both of you are sharing an inside joke about what is this asset in West. So tell us also what but we'll touch upon that.
I think in West, and there'll be one in South as well. But we'll keep it at that.
All right, Jyoti, thank you very much. It's a pleasure. Thank you. Appreciate your time here on CNBC-TV18. I saw a flash, and this is not good. So this is government sources saying, and this seems like deja vu, because if you remember, sometime back you had I think this is a few months ago, the oil and gas minister, essentially commenting about CGD profitability and the margins that they're making, etc. Remember, that episode lasted a couple of days. Stocks completely tanked. And I think we've got now government sources saying market expectations need to be more nuanced on CGD profitability, right? This, in a way, flies in the face of expectations that city gas companies will immediately hike prices, etc. And that's why I'm saying this has a certain sense of deja vu. City gas companies' profits may normalize with APM gas cuts. Normalize lower. I think that is a clear hint coming in from the government. And this is the second time in the last at least 6 months, because that earlier episode was about 6 months old. And that was, of course, from the minister himself on the record. And at that point, I remember we'd spoken with the PNGRB chaps and asked them what this would mean, etc., whether a directive has been issued to them or some such. But, that is what is coming through. The only sort of silver lining is that city gas companies have already sold off so aggressively. And this is coming into already a completely beaten down space in that sense. So more on this as we go along. We'll have our reporter join us as well. But look at the market on the other hand, right? The Nifty is up 70 points. So we've got a surge coming, and it's a pretty strong one at that. 24,842 now on the Nifty. And I must say, the gains are being led by banks. ICICI Bank, the intraday will tell you 25 index points, Nifty points coming in from just ICICI Bank. It's followed by Infi, which is adding about 12 points, and HDFC Bank, which is adding about 12 index points. It's followed by Bharti and Reliance, each 10 points. I mean, Bharti 10, Reliance about 9 odd points or so. So this is what's happening on the index. 66 odd points off the lows by quite a bit, but will we be able to sustain is the question. We take a break. We are back, and more stock-specific action on the other side when we return.
Welcome back. Okay, looking at some more trends right now. That gain, which was about 35, 40 points, is now expanded to 60 points in the Nifty. So it's good going over there. The leaders today include Shriram Finance and ICICI Bank. So two BFSI names that are leading the tally on the Nifty pack. Then come in some of the IT movers and shakers. So Infosys, Wipro, Tech Mahindra. There's a fair amount of buying over there as well. And then you have the big heavyweights. Look at ITC, Lever, and of course Reliance itself. So all of them put together are sort of all chipping in, and that explains the move that we're seeing on the Nifty now. So no really big issues over there. If I talk about some names beyond the Nifty, then one stock that's catching the eye is Hindustan Zinc. Remember, of course, we had the management conversation as well, and Nigel was telling us about the blowout performance, and the management remains quite optimistic. So 3% up on Hindustan Zinc, 3.5%. And I remember that last question, remember on whether any divestment is going to happen and whether it will happen in this calendar year or not. So not sure.
This time, Mr. Mishra, he knew what I was going to ask. He said, we are not selling, the government will sell first. They'll do that OFS first. Just one quick point on Hindustan Zinc. The stock used to be 750. It's come down to 500 because there was no float. Now there is a little bit more float post that selling, but still I think only 2-3% is traded. And the reason Hindustan Zinc is doing well, it's the only way you can play silver. Silver is at $34 an ounce. That's only one way to play. That's Hindustan Zinc. And, they're going to do 750 tons in this year itself.
All right. Well, let's address that city gas distribution news flow as well. Sapna is now joining in. Sapna, I was saying earlier, this feels a bit like deja vu. We had that oil minister comment 6 months or so back, which caused a ripple. And now government sources telling you that market expectations about CGD profitability needs to be sort of adjusted, normalized in that sense. Tell us what you're picking up.
Absolutely, Prashant, you have read it right. So the understanding basically is that, yes, the CGD players have had a pretty good run and they are still having a good run. But in terms of their, their continued profitability on the higher side, may post this APM gas cut, gas allocation cut, it may just be possible that some normalization, quote unquote, in the profitability may be visible, which is not a bad thing, as per the government view, so to speak. Also needs to be kept in mind, just to balance this out, in the sense that three players have already made representations to the government last week, and within that, Prashant, is one point I would like to highlight is that, maybe it's also a matter of interpretation. So when you're talking about the new well intervention or gas from new wells in terms of legacy fields, 20% premium pricing, which is part of the Girish Parekh recommendation, that is what Cabinet had approved in FY24. There, basically, the company is saying that this 20% premium pricing should be done actually on the ceiling rate of $6.5 and not the APM rate of 7.48. So as of now, the APM rate is 7.48. So a 20% on that actually turns out around $9 odd. That's how the gas pricing will happen for them. In terms of the incremental, the cut that has happened, the incremental gas that is to be sourced from the new wells. So that is one aspect where they have put up, and more or less government is indicating that things are not too bad. They have also been cutting allocations for the gas plants as well as for the gas majors themselves, like the internal consumption of GAIL and ONGC. All of that has been coming down.
Yeah.
So this is
I guess Sapna, Sapna, I guess the message seems to be loud and clear from what you're telling us, what sources are telling you, that if you want to charge market pricing, make sure your input is also market prices linked and not regulated or administered pricing. Got that, Sapna? Thanks very much. That's an important development and we'll keep tracking it. But now let's move on to the big event of the morning. We're minutes away from that big IPO listing of Hyundai India. If we look at the pre-IPO session, the stock is about 1% or so lower. 1960 was the issue price. And of course, the street has been abuzz with the fact that this is probably going to be a tepid listing. The retail portion was not fully subscribed. Ashwin Patel, equity research analyst at LKP Securities, joins in to talk about not just today's view. Obviously, we're looking at a medium to long-term view. This is a very large enterprise that's looking to list in India. Ashwin, so the concerns have been well documented, right? It's an OFS, the Koreans are selling 17% equity, taking the money out. But what's your view? I mean, does this at all make sense for someone who's looking to add to auto positions from a medium-term basis to the portfolio?
See, I think that, Hyundai is a second best option after Maruti. Because it's a pure play and has been in the industry since more than 2.5 decades. So they know the intricacies and all the nuances of the auto passenger vehicle industry in India. They're the number 2 player. They have got a market share close to about 15%, and the market decline has not been that stark as compared to Maruti also. And they have got strong numbers. Their margins are close to about, in Q1, they reported 13.8% kind of margins as against Maruti's 12.2%. So, their product mix is also very strong, as in 68% of their volumes come from the SUV segment, while for Maruti, it's about, it's quite less as compared to them. But the small car segment, which is decelerating, that is, for Maruti, it's at about 39-40%, and for Hyundai, it's just at about 12%. So, and 68%, as I said, come from SUV segment, and 20% come from exports. So, they have got a very rich product mix. And they have got a very, good, product line pipeline coming up, with 4 new models coming in next 1 or 2 years. And the Creta EV is one that everybody is waiting for. And they have got a good product mix in form of CNG. They are coming up with a good CNG product pipeline as well, ICE as well as EVs. So I think, they have got very good return ratios as well. So it's a good bet to be into from a medium-term to long-term perspective, I guess.
Okay, I think we've got the Hyundai management pictures. Now, let's stay with the pictures because the bell-ringing ceremony anytime now. And let's have the price on one side. And because I think we should be able to view this as the largest ever IPO in India. Makes it to the market. There you go. That's essentially, so you got the car, you got the people, you got the price, and you got the logo, all in one frame. And you got the first the gong and the bell going off anytime, and in the next couple of seconds. So it's going to be, at least at start, as was expected, at a slight, it's going to be flattish, right? 1900 odd is where the indication is the stock is going to come to the market. And it's about 26 rupees lower than what they sold stock at in the IPO. And look at the volumes already on the NSE, 4 million shares, and of course on the BSE as well.
That's a Creta, right? There's a Creta rotating around there. I think so.
I think that is the Creta. I think there's the Creta. And if you remember, they told us that there will be the Creta EV, which is going to come to the market pretty soon. I think they said by the end of the year, by December, that should hit the market as well. So you got the NSE boss, and you got the Hyundai boss, and of course the contingent from Korea, which is here, and I think you got the price starting to trade. So yeah, it's ticked up into the green. It's slightly higher, and it's flat. Absolutely flat. About a quarter higher, a third lower. It's made it to the market at 1934, and the issue price was 1960. So that's essentially what you have on the Hyundai IPO as it starts to trade. 1% down now, 1938 or so. It's a big moment. It's the issue price, the opening price is the opening price, and we'll sort of continue to talk about that. But it's a car brand which most Indians are familiar with. For so many, it perhaps has been their first car as they moved on, and of course maybe graduated to higher models of Hyundai. And they are now part of the listed universe here in India. Big one, and it's gotten done.
Oh, absolutely. And I remember, I think the brand itself, it'll be part of public memory and private memory for so many Indians out there, right? The revolution that they caused with their Santro and then Santro thing. And the story goes on. The question is really, What from here? The listing has happened. It's 11 rupees lower. Let's bring in Prakash Dhiman into the conversation as well. Prakash, before you joined in, Ashwin was just telling us it's all about the new launches, right? And that's my real question to you. Yes, they're doing much better than Maruti in the SUV space. But the question is, going forward, can they keep taking on the onslaught from, let's say, a Kia, which is a sister company? Can they keep taking on the onslaught from Mahindra and Mahindra? Can they really go out there and get market share on SUVs? And then the whole EV battle as it's building up. If you were to buy Hyundai Motor right now, if anyone were to buy it, that would be based on what kind of market share and sales projections?
Good morning, Subhi. So I think it's very clear. This is a business that you would have to look at from a very long-term perspective. I mean, even when you talk about the history, you're talking about flashes of salience that have happened over the last many years. And you would expect that to continue over the next few years. Now, whether you want to pay a price as steep as this, that's the big question for whatever businesses that they expand or launches that they have. My sense is there's enough supply of newer models from everybody out here, whether it's Tata Motors, whether it's a new renewed interest with Mahindra, it's Maruti making a comeback. So it's going to be a very competitive market like any other market globally. So you'll have to realistically anticipate that Hyundai would also find it quite challenging to continue growing at the same pace that they've grown in the past. So my sense is it's going to be an average player. There's nothing exceptional about their launches that will make them number one or market share wise leadership positions in beyond certain segments or sub-segments. So yeah, I mean it's a good auto play to have on the bourses, but you look at the supply of stock that's available. I mean, you will always find it extremely difficult. Their idea was an OFX. They never needed the money to grow the business in that sense, and they've done that. So whether as an investor it serves my purpose is the question, and the answer is probably not. So I'm not too excited about buying into Hyundai. You can buy the cars, maybe not the stock.
Ashwin, so let's drop the contrast, right? If you want to own passenger vehicle stocks in India, you've got Maruti, you've got M&M, you've got Tata Motors, and now you have a Hyundai. I'm talking about top of the line names here. What would your pecking order be?
My pecking order would be M&M at the top, because they have got a superior portfolio on the SUV side. Their farm equipment segment is also, I guess, going to do good considering, good monsoons. So at the top would be M&M. Then maybe like Tata Motors would be there because, everybody is aware, they are getting a good kicker from JLRs. And of course, I mean, they have got multiple levers as such. In passenger vehicles also, they are doing good. In commercial vehicles, I think, there'll be green shoots available. We can see them by the end of FY25 or maybe like in FY26 first quarter. So Tata Motors should perform well from, maybe like 2 to 3 months down the line, they should start showing good performance again. And third, I would be, going on for Hyundai and then Maruti because of the points that I said earlier, like superior product mix, then good launches coming up, then higher, contribution, as I said, from the SUVs that goes under product mix again, and strong ratios, and the market share is also not falling to a great extent. They may pick up market share, who knows, with the Creta EV coming up. So I think third would be Hyundai, and then I would go for Maruti in that order.
Okay. On the subject of valuation, Prakash, comment on this. I'm going back to a comment I remember starkly. We had Mayuresh Joshi of William O'Neill in the studios a couple of days back, and he said, look, because the Hyundai management themselves said, it was a conversation with them, and they said that if you take out the post-COVID pop, that whole sort of, revenge buying, pent-up demand, then the steady state growth rate has been about 5% for the industry, for the car industry here in India. So maybe, that's not too bad. That was their argument. But then I go back to what Mayuresh said, and I think it was a very big point that he raised, that in an economy that's growing at 7%, do you want to be buying a business growing at 5%? So just comment on this, and then on the valuations as well. At what price would this look good at all? And then, how would you look at taking exposure to four-wheelers, if at all you will?
Yeah. No, I think that's a very valid question. And as investors, we need to focus on what's the return on the business rather than, how the cars seem and the products stack up in terms of market share and all. So very interesting. This thing that the penetration rate in India as compared to China. So we still have about 8 cars per 100. China is probably at about 27. The US is at about 60. So, you have all those metrics which tell you that there's a very strong headroom for growth for this market. But at what price? And the taxation structure in India is such, that even if you and I keep buying cars every 5 years, it's not necessarily that the company will make money. The cost of production, the taxation structure, the distribution costs, all of that, the upkeep costs, there is so much of load on that. All of these are fairly loaded in that sense. So it's not a very high margin business anymore. So, that's exactly why the premium car segment is growing faster, because you still have some leeway there. You have double-digit margins coming in, the kind of maintenance money that, O&M money that the landmark tends to make and things like that. My sense is Hyundai is valued richly in terms of, whatever growth rate that they can do, irrespective of how, the market share happens. The market size itself is not going to let them grow too fast. And margins are going to be always going to be having a lid on in terms of, what they can do. So 5%, 7%, 8% growth is at best you could. And that's exactly why the valuations globally are so low. Globally, PE multiples are still single digits or probably just, about 11, 12. And here you are paying 20, 22 times. So that itself tells you that there is a shortage of supply of good paper, and that's why there's demand. And the institutional approach tells you exactly that. So valuations are a bit stretched. I don't think there's much of headroom for the PE expansion to happen.
No, I know. And then there's a question of supply overhang as well, right? The promoters have sold about 17.5%. They'll have to sell more in the market to meet regulatory norms in the next coming few years. Gentlemen, thank you very much for joining in, shedding some light. We just want to wrap this discussion by perhaps we can throw those graphics up. There are some foreign brokers, by the way, who've come out with pretty strong targets on Hyundai Motor India. Nomura has initiated coverage with a buy. Their target is 2,472. They're optimistic on the product mix and sort of the volume trajectory going forward. And Macquarie also has an outperform rating. They've just started coverage, 2,235. Some of these foreign brokers are keeping a more optimistic view on Hyundai Motor India.
There are some very interesting flashes coming in from. We should have the flashes up if we can, please. Ashwini Bhatia, SEBI, whole-time member SEBI, is making some comments. There's a Morningstar conference which is underway this morning. And he's speaking at that conference. He's opening the keynote speaker. And look at the comments. India accounts for the largest volume of F&O globally. This is a crown we should not wear. It's a very, very sort of punchy statements which are coming through from Mr. Bhatia this morning. He says investors are protesting why SEBI has tightened rules. F&O cannot be a national pastime. If there was... it's such a great way to put it. You agree or not, but it's just such a punchy way to put it. Really gets the message across in terms of what SEBI's thinking is. And he's saying that cannot be a national pastime. Investors should make serious investment and contribute in wealth creation. And he goes on to say, and we'll put out more stuff, but I'm reading out what's coming in. He says, working on a discussion paper on SME IPOs. Remember, Mr. Bhatia is the one who passed an order in the case of, Traffic Soul. Traffic Soul was a company which is a SME company. They were planning to list on the SME exchange. They collected money, and after the money was collected, BSE essentially raised questions, and then SEBI, and the order was signed by Mr. Bhatia, put out a order essentially asking the company to put the money in an escrow account. And asked BSE to investigate and submit a report within a month, I think it was. So he's saying that working on a discussion paper on SME IPOs, which should be out soon. He says disturbed with how IPOs are being oversubscribed, not comfortable with what's going on in the SME space. Retail investors advised to be extremely careful about the SME space. And he kind of goes on. The speech is still going on, but I think that one line, F&O cannot be a national pastime, I think is a powerful way for SEBI to really communicate to the wider market what their thinking really is on that particular subject. But we'll build on this as we go along over the rest of the day. We'll take a quick commercial break. We are going to come back with It's the Economy. My colleague Lata will get chatting with some special guests. RBI, remember, has issued draft rules saying a bank and its subsidiary cannot be the same. And and that is lending loans. Lata is going to talk about this with Suresh Ganpati of Macquarie and Harshvardhan of Bain & Company. That discussion follows in just a bit.